I get a sense that there might be something to do with the Juniper acquisition that recently closed.
Okay.
So there might be a little bit of messiness. I suspected that it was going to be a messy quarter going into the print. They beat this quarter. I think it was due to Juniper, and then the outlook was a little bit light. So trying to figure out if it's more Juniper related or HPE related.
Yeah, but shares spiking lower. There was a big move down to 2160 that closed at just north of 2280 today. Shares down by about 2.7% as we speak. So even though you mentioned this beat, investors sending shares lower.
Yeah, it's the free cash flow number, right?
Okay.
They did guide down.
Even if there's some nuance there, this is like just the reflex.
But we got to see what Antonio has to say on the call.
It's a big difference.
We'll see.
It's a big difference, right? Seeing free cash flow of about 700 million to it had seen $1 billion, and the estimate was 1.28. That's a big difference, right?
That is a big difference, and you have to keep in mind that they cut that free cash flow guidance early in the year because of the execution miss, right? So going down from $1 billion where they said it was going to be a floor, and bringing it down even further is quite disappointing.
Wow. Okay.
Let's
go. Go
Did
ahead.
you see some of the commentary?
What are you saying? What are you saying?
Antonio Neri saying customer demand stretched broadly across our portfolio, particularly strong in our server and networking segments. He says, as we enter a new chapter at HPE, we are focused on capturing the tremendous market opportunity through execution that delivers strong, consistent shareholder value. I always love CEO speak, and whenever I see the word execution, it makes me crazy. But I do know that you can put stuff out there, and it is about executing on it. Anything there that's of interest?
Yeah, so the networking isn't a big surprise because we knew that we were going to get roughly around $300 to $400 million from the Juniper deal in itself, so that should have beat. The AI on the server side, it's AI servers that may have driven that beat. Now, if you have a higher mix of AI servers and a weaker traditional server sales, that's going to be a drag on margins, and that might be one of the reasons why the free cash flow might be a little bit down, because it is going to affect gross margins and the margin profile. And we'll just have to hear what Antonio has to say. But I agree with you, Carol. There is a lot of CEO speak there by Antonio.
Yeah, he's mastered it. I mean, he's been doing this for years, so he knows the way to communicate. I think it's fair to say. I'm wondering about the customer demand part of it. In the statement, as Carol read, he says that customer demand stretched broadly across our portfolio, and it was particularly strong in our server and networking segments. When you think about customer demand, that's always what I want to hear from these CEOs is like, I want to hear what types of customers are spending more, what types of customers are spending less, and where in the world these companies are. What can you say about that?
All right, so there's a couple of things in there, Tim. If we talk about product only, right? We know that AI servers are essentially white hot, and this was supposed to be a big quarter for HPE. $1.7 billion, and it looks like they may have beaten that, at least come in line and beaten that. Networking has actually been in recovery phase for the last couple of quarters, and it continues to do so. Juniper, as a matter of fact, has seen triple-digit order growth prior to the acquisition. That's probably sustained. Now, the one caveat is that traditional enterprise IT is the one area of concern. What we saw was weakness from NetApp. We heard that from Dell, right? And a couple of areas. U.S. federal spending, they're still getting doged here, right?
Well, talk about that a little bit. Where did that hit them, and why?
Well, for all the companies, we are seeing a little bit of curtailment of spending, primarily because of some of the Doge activities and also delayed deals. If we go back to Dell, some of their guidance was a little bit misguided in the sense that AI actually lifted total sales, but they actually pulled back enterprise IT sales. And HP, as the number 2 enterprise IT provider, I wouldn't be surprised, when the tide goes out, HP is going to be impacted as well, potentially impacted as well. So I'm curious to hear what Antonio has to say in terms of total overall enterprise spending.
Hey, we're talking with our Woo Jin Ho, senior hardware and networking analyst at Bloomberg Intelligence, out there in our BI headquarters in Princeton, New Jersey, talking about HPE. We are seeing that stock down about 2% in the aftermarket. I just got to mention that C3AI is also out with their latest results, and the company is dropping like a rock, down about 13%. This as the company withdraws its fiscal year guidance on the news that it is appointing a new CEO, C3AI, to provide third quarter fiscal year guidance in the second quarter release. So again, we're seeing this one, which is already before the drop we're seeing in the aftermarket, was down about 51% year to date. Another software company, infrastructure software company, enterprise AI applications, about a $2.3 billion market cap, but that market cap already quite a haircut this year, and we're seeing another haircut in the aftermarket, down about 16%.
Yeah, the company coming out and naming Stephen Akin as the company's CEO. Shares in the after hours, wow, they, like you said, Carol, dropping like a rock, even with today's move, down 16% in the after hours.
Woo Jin, as you look at the technology space, obviously the hardware networking, but, some of these pieces fit together. Are there any kind of major trends, narratives that are kind of coming out in terms of where the spend is by companies and where it isn't?
Yeah, as I mentioned earlier, Carol, and anything that's related to federal, we've seen it from Anurag's names, as well as Sunil Rajgopal's names, who covers AI as well as the infrastructure spend. If you have high federal exposure, you are going to see a curtailment on sales as well as the outlook. And I suspect that C3 AI may be one of those as well. Infrastructure software, I believe GitHub came out as well. It's almost they're getting AI'd, right? Some of the automation that's coming in there, you are starting to see a curtailment of spend as well, because the automation is replacing some of the stuff that's happening on the infrastructure software side.
That is fascinating. Yeah, GitLab, as you mentioned, down about 7.7%. We mentioned this in terms of its fiscal year outlook. The company sees fiscal year EPS 82 cents to 83 cents. It had seen 74 to 75. The estimate on the street is 76, but still sees fiscal year revenue of 936 million to 942. Estimate on the street is 940 million. So a lot to watch out for.